When the closing bell rings, the real action often begins. After-hours trading can be a thrilling yet unpredictable world where stocks make dramatic moves based on earnings reports, news updates, or market sentiment shifts. Some of the biggest names in the business world were in focus recently, with companies like Applied Materials, UnitedHealth, and Intel capturing investors' attention. But here's where it gets intriguing. These after-hours movements can set the tone for the next trading day, influencing everything from individual portfolios to broader market trends. Let's break this down so it's crystal clear, even if you're new to investing. When a company releases its earnings report after the market closes, essentially its financial report card, it can cause ripples across Wall Street. If the numbers beat expectations, the stock price might soar. Conversely, disappointing results can send shares tumbling. This is exactly what happened with Applied Materials, whose performance metrics sparked significant interest among traders looking to capitalize on post-market volatility. And then there's UnitedHealth, a giant in the healthcare sector. Their after-hours activity wasn't just about numbers. It also reflected investor confidence in their long-term strategy. For those unfamiliar with how healthcare stocks operate, they are heavily influenced by regulatory changes, economic conditions, and public health trends. So when UnitedHealth makes headlines during extended trading hours, it's worth paying attention, not only because of its impact on your watch list, but also because of what it signals about the industry as a whole. Intel, too, has been making waves. The tech behemoth's stock performance after hours highlights the ongoing battle between innovation and operational challenges within the semiconductor space. And this is the part most people miss. While Intel's quarterly figures matter, its guidance, or outlook, is equally critical. Investors aren't just betting on today's earnings, they're speculating on tomorrow's potential. That's why every whisper of future growth, or lack thereof, can lead to wild swings in share prices. But wait, there's more to unpack here. Why should you care about these after-hours movers? Well, imagine waking up to find that a stock you own has jumped or plummeted overnight due to developments outside regular trading hours. These movements can create opportunities for savvy traders, but also pose risks for unprepared investors. It's a double-edged sword that requires careful consideration. Now comes the controversial angle. Not everyone agrees that after-hours trading is a level playing field. Critics argue that lower liquidity and wider bid-ask spreads can disadvantage smaller investors compared to institutional players who have access to advanced tools and resources. Does this mean retail investors should avoid after-hours trading altogether? Or does the potential reward outweigh the risk? These are questions worth debating, and we'd love to hear your thoughts in the comments below. So whether you're tracking Applied Materials' latest innovations, analyzing UnitedHealth's strategic plays, or keeping an eye on Intel's competitive positioning, remember this. The stock market never truly sleeps. Every tick, every trade, and every trend tells a story. And understanding these stories can empower you to make smarter financial decisions.